I don't think an elections in the long run is any material event as far as markets are concerned, especially when we have a split house. And to give you again some perspective on what happened in the past, and we do not have enough data to make an intelligent decision based on past events, because elections and split houses don't happen that frequently. So a single event or two events or three events should not be taken as a way of understanding how the future is going to look like, because it's not big enough sample to make any accurate decisions anyway. The markets go up or down based on the economy and corporate earnings. Corporate earnings in the last third quarter came out at 24%. If you were to compare it to the last first quarters, it's just about the same. In the first quarter we had 25% growth rate, more or less, in corporate earnings. In the second quarter, another 25% more or less. Pundits on the street expect that next year to be a lot less as far as corporate earnings growth. They are talking about 6 to 7%. And the main reason for that is the dwindling effect of the tax cuts. In general, I don't think the elections are going to have any material effect of the outcome of the market 12 months from now. The outcome will be dependent on other issues. We got some strong Institute of Supply Management numbers this morning at 60, still very strong, still indicates that the economy is growing quite strong, and GDP growth rates looks like will stay at about 3.5% or better. We already mentioned three undervalued sectors in the past. We mentioned the banking sector. We also mentioned the Chinese names. And I'm going to bring one more sector which I think is completely undervalued, and that is the aerospace industry. And the reason I want to speak about the aerospace industry is because it does look to me quite attractive. There are three main attractive companies in that space: Lockheed Martin, Northrop Grumman, and Raytheon. Lockheed Martin looks to me quite attractive. The company is selling at 17 times earnings, down I think about 10% this year, mainly because of budget concerns. What happens if Congress flips back to the Democrats, because the defense budget right now standing at $715 billion for this year, just about, might be cut. That is a concern. Trade wars don't help these companies because 30% of their business goes to export. Therefore, these companies are down quite a lot. And they had a wonderful run, by the way, in the past 2 years. In my view, the reason I want to speak to you guys about it is because the Chinese and the Russians, as far as I'm concerned, are pushing us into an arm race. Call it the Cold War 2.0. The Chinese, for example, are working on what they call Starry Sky 2. Sounds very peaceful, but it's not that peaceful, because this is an hypersonic missile that can fly at about 5 times the speed of sound. They also can maneuver quite well. So imagine a missile that costs about $500,000 to produce can now take down a US carrier that costs about $20 billion to make. And what I'm submitting to you guys is that I think we are going to go into some sort of an arm race where budgets are going to go up, irrespectively of who is in control of what government body. They are talking about right now on just the missile defense system alone to spend about $1.5 billion per year. And that number should go, they say, to about $5 billion per year. And I don't think the US is going to sit idle, and I don't think budgets are going to be cut. And I think spending is going to go up, because we have no choice but to join that arm race. Then companies like Lockheed Martin and Northrop Grumman and Raytheon start making sense, especially if they are down 10% so far, this year. Some people say that Lockheed Martin can do $24 per share by 2020. That puts that company at 12 times earnings. We can also invest in an exchange-traded fund that covers the group. Software is a huge part of the defense spending nowadays. And the players in that space is companies, some of them we are very familiar with, like Google and even Amazon. They are talking about swarms of drones to take over fighter jets. Imagine it takes, I think, about $1 million to train a US pilot, and it takes a fraction of that to fly a drone that can achieve the same result. Artificial intelligence, swarms of drones. It's technology. And the companies that are a part of it, and that's a lot of software, artificial intelligence, are companies that we are involved with.
However, the military will not use Google software to do high security stuff because they're more into open architecture things. Raytheon has a big section that does software. The other part of this is you're talking about things that fly, but they're doing a lot of work with submarines, going high-speed submarines as well, highly intelligent things. And you could see a robotic sub coming. It's like when they took the military and they made a drone. They have some very sophisticated drones that pilots are flying 2,000 miles away from where the plane is. And when you take the pilot out of the plane, it reduces like 40% of the cost of producing that plane because of all the support systems you have to have for the pilot.
They're flat on iPhone sales, and I saw from what I was reading that it's down because people don't like the fact that they're not going to be reporting iPhone sales anymore.
Correct. Well, Apple is a classic case of a company that is falling for its own right of doing so well over the years. The reason they are down today, by the way, is because there were some reports out there that the new phone was supposed to be the gift of the holiday. The iPhone XR that has facial recognition and all the features that the iPhone X had, and it still sells at about $250 less than the X. I think the average selling price is about $750. So apparently the XR production numbers are coming down for the holiday season. So this is why the stock is down today. People on the street are not comfortable that they are not reporting unit sales. So that takes some confidence out of the stock. In my view, that there is so much going for this company. All these bumps in the road are not going to make that much of a difference a few years from now. Hello everybody, and thank you for watching our videos. If you like our content, please subscribe to our YouTube channel. You can also find us directly by signing up to our website at tamarsecurities.com and our affiliates, 911 Financial Services and Firefighters United. You can call us directly to our Woodland Hills offices at 818-914-7461. The highlight of the week, like Warren Buffett used to say, be greedy when everybody else become fearful, and be fearful when everybody else become greedy. Especially during these times of uncertainty and market volatility, be professional and take advantage of cheap valuations.